Hi there. Welcome to another edition of TokStocks. I'm your host, Keir Reynolds, and today we're lucky enough to catch up with Colin Joudrie, President and CEO for Selkirk Copper Mines. Trades on the TSX Venture Exchange with the ticker SCMI. Colin, how you doing?
Very good. It's great to see you. It's funny. It seems like it's a long time since we chatted, but it's actually not that long. I think it was in December. So really happy to be back on a call with you and hopefully provide you and your parties, your interested folks, a bit of an update.
Well, let me tell you, I didn't know what to expect. Somebody coming from like a major going to like a junior sort of situation, but it looks like you've really taken to the role. Selkirk obviously has performed quite nicely since we last did the interview. You guys just closed on a financing, which has now sort of given you guys a bunch of new capital. It was a good financing. You're able to do it at accretive prices. We're going to sort of unpack some of that. And you've been pretty fast and furious with keeping some regular news flow and keeping the company topical, which is sort of what we want. But for those of my viewers that weren't able to catch our last interview, we did it in December. Boy, my God, it does seem like quite a time ago, even though it wasn't that long ago. Maybe for those of them that couldn't catch that, maybe just a little bit about who you are, your background.
Sure. So, well, look, I think I mentioned it before, but I'll do it again. I started my career as a geoscientist, and I was sort of late 80s, early 90s. It seems like yesterday. And I started with a company called Cominco Limited, which was part of the Tech Resources group of company in the fullness of time. And many of your listeners will probably know Tech a little bit better than Cominco, but it was a great start for my career in the sense that I had the chance to look at a whole cross section of commodities, base metals, precious, diamonds, bulks, and some industrials. And then I sort of, just progressed through the group largely in exploration for the first number of years and then resource definition. I moved to South America, had a number of years working out of Santiago, Chile, and Peru, Argentina, et cetera, and really more advanced projects, big copper porphyries, and then also increasingly the exploration business development side of things. I was lucky to get a short stint in Australia where we had a couple of operating mines and sort of got my first taste of what it meant to be bringing that technical aspect into the assets and also thinking a little bit more about what the value proposition was. And then I had a great opportunity to move to Southern Africa and establish a corporate presence for Tech Cominco at the time in the early 2000s out of Windhoek, Namibia, really established different relationships with the South African mining houses and advanced some of our exploration efforts there in copper and base metals. And then by luck or by accident or both, was able to shift gears and move into a very different part of the business, was concentrate sales and metals marketing out of Toronto for a number of years and really got exposed to that different side of the business. And then got exposed to this trail smelter in a very different sort of role, very commercial and quite entrepreneurial, particularly around things what people talk about today, critical minerals and high precious metal value in things like indium and germanium and gallium and arsenides. And so that was fun. And then, and again, the tech was a really quite an entrepreneurial group. People have asked me what's the difference between tech then and being in a junior today. To be quite honest, not much. I think it just happened to be a company that was very thoughtful about high levels of ownership and integrity in their groups and people who wanted to take risks, measured risks. And so that's kind of where I came from. And then the latter part of my career within tech, as it became a little bit more staid, I guess maybe is the right phrase, I was responsible for the copper resource development portfolio, which is about 6 assets throughout the Americas. And that was from about 2016 to 2024 when I stepped away from tech. And it was a ton of fun. Like I was in a very different sort of space where we were bringing a very strong commercial view to the developments, bringing partners in, partner dollars, but also reframing the assets in the context of what we thought then was a long, multi-year, if not decade, bull copper market on the come. I think we were a little early in 2016, 2017, but I think the fundamentals are still there. And I learned a lot that I'm applying to this. So it's, yeah, it's good fun. A little bit of luck. Sometimes it takes a bit of luck.
Well, there you go. Well, thanks for a good, wholesome sort of overview on.
Sorry, it's too long, but
No, no, that's okay. That's a lot of varied experience, and that's pretty much what it takes to run an emerging copper company. You got to sometimes wear all the hats. So you've got all the hats and did everything from monetizing selling metals to going and helping on assessment project suitability. So you kind of covered the gamut. Anyways, let's get into Selkirk. So it's a great name. It seems to have really sort of gravitated with those investors that were looking for leverage to the copper price. Maybe you could just give a little elevator pitch. What's Selkirk Copper? Where are you located? What's the business plan?
Sure. So like I'm trying to communicate the history as we see it going forward, but it's really important to know that this was a former producing copper, gold, silver asset in what I call the infrastructure advantage part of the Yukon. And unfortunately, in the sort of early 20s, it got on some sort of hard times where not everything was working the way it should be, not because the asset was in poor shape or whatnot, but just some financial operational decisions were made. And ultimately, the last operator went into bankruptcy. Where we come in is we're taking advantage of that bankruptcy in the sense that we now have a clean asset. All the financial obligations, historic, et cetera, have been removed. We have the chance to come in with a new set of investors. This all started with the Selkirk First Nation, hence Selkirk Copper. They acquired the asset out of bankruptcy. They agreed to contribute it to a public vehicle to raise funds and pull the teams together, but really put a plan around it and bring this thing back into production the way it can be done. And it's quite an advantage situation. Like I said, we've cleared the asset of all its former liabilities, the big one being a gold silver stream that sat astride this thing back to 2007. That's about 35% of the revenue value here. We now have that in our hands. And then I think the other really critical thing is there are resources in the ground. It's not absence mineral resources. We actually have a good starting position. We just completed a 52,000-meter program to bolster our understanding of the geology and resource, put mine plans together, and get back into production. And the last thing I'd say to your investors or the audience is we're not in a rush to go back into production. I'd love to be in production tomorrow, but the reality is we need a coherent set of plans, execute those plans so that when we do come back into production and we invest the big dollars in the restart, it goes well and shareholders know that that copper's coming. And it's rare, even though it's 2028 where we forecast new copper production, which is sort of lightning speed in our industry. We still have to go through the process of doing it right and making sure that we live up to the expectations of our shareholders, the First Nation, and the broader community. So it's a lot of fun, I must say. It's a great part of the world. It was bloody cold in December when we were affecting part of the drill program. Coldest December in like 40 years. It was minus 55 at the site, but we managed to get the work done. Nobody got hurt. Like really well done work. I'm quite proud of the team. And now we're just moving into the next value stage of this, which is a PEA for mid-year this year. First time we'll see updated economics on this asset going back to 2021.
So, are there any sort of unique challenges to minus 55-degree weather drill program? Are you breaking any bits?
Yep.
Are people freezing to death? What are some of the challenges with that?
Well, we slowed it down, you might imagine, and made sure everybody knew where there was a warm place to go. Yeah, we had about a week of that very, very cold weather. We reduced down to 2 drills and then shut down for Christmas. I think the biggest thing about cold weather, hot weather, windy weather, whatever it is, it's just about communication and making sure the men and women on the ground know that they can say, enough of this, let's stop and take a pause. So I think that was my biggest sort of thing. If I stay up at night, I worry about the phone call, right? Where someone might get hurt or a piece of equipment might break in a way that could injure somebody. So fortunately, none of that happened, but it could have for sure.
And how many? So now you were drilling, and that's been part of the excitement of this story is you've been able to put out some results, kind of for the first time for people to really kind of like understand. They've heard that it was a past producer, they've heard about all that story, but then understanding what this ore body might sort of deliver in terms of like drill results. So, would you mind sort of covering off like some of the types of drill intercepts
Yeah.
and some of the grade that you guys have sort of encountered?
Yeah, look, I have to say it's sort of outperforming what I even thought it was going to do. But everybody, so we've got essentially about a 3.5 kilometer long section of targets that comprise about 5 different zones. And this historic asset and the go forward will be underground and open pit. And sort of the underground zones tend to be a bit higher grade, and the average grade in the undergrounds is somewhere between 1.4 and 1.8% copper. And then you've got the gold and silver credits on top of that. And the open pits tend to be a little bit lower grade, but call it sort of zero point 0.9 to 1.1 or 1.2% copper. And what you have is multiple stacked lenses. These things, there's about 84 lenses that we're evaluating as part of the area of interest within that 3.5 kilometers. The 5 zones, one's called Minto North. I'll touch on that in a second. And then further to the south is what we call 118 and the Ridgetop, 2 open pit targets. And then Minto East and Copper Keel. So each one of those has its own character. We've drilled all of them. And out of the 175 holes that we've done, about 87% have hit what we thought that was going to hit, either expanded the zone, hit the mineralization, and informed what we wanted to get out of the drilling. The Minto North Zone, highest grade on the property so far to date. I think the best intercept we have is just under 12 meters of about 8% copper, and that's like fantastic. That's the sort of stuff you really want to hear about. But then in and around that zone, we've basically taken what you call the Minto Northwest Zone, and at the same grades of that sort of average, what I would call just about 2% copper with gold and silver credits, we've almost tripled the size of that zone in the drill program. And we're going through that process right now of updating it, but that's great results. The next areas where we've had really good results is in the Ridgetop and the 118 zones. We've actually hit a couple new zones that we didn't even know about, and at better grades. So again, some upside potential there that's pretty good. And an example there was in this last news release, and I think I'm going to get the numbers right, like 6.5 meters of 3.6% copper, etc. That's the sort of stuff that really allows us to mine this stuff and make some good money off of those grades and thicknesses. And our objective here is just to continue to add to that understanding. I think when I talked about the preliminary economic study for mid-year here, what I should also let everybody know about, as part of that, we will update the mineral resource estimate across the whole property. So we'll take those 52,000 meters, we'll take the good, the bad, and the indifferent, we'll update the model and the resource, all with the intent of getting mine plans that make sense. Long story short, it's delivering as we hoped, and if not as we hoped, even a little bit better.
So you've got you're part of the Fiore group of companies. So you've got a few interesting companies kind of in the office. I guess one one that's a bit topical is this one, West Red Lake, who sort of took on a past producing sort of gold mine and then had to very quickly come up with a different plan to sort it into production. Are you able to like use any sort of like learnings from that and make sure you apply it to this sort of like restart? If there's
Yeah,
something I might if there's something I might sort of comment on just from an outsider looking in, I did feel that they were under an extreme amount of pressure to move quickly and maybe sometimes too quickly. Not saying that they didn't do excellent work, but you don't really want investor pressure dictating operational decisions. You want operational decisions that really
inform.
dictate.
That's right.
Yeah, really
Uh,
informing the ore body. Yeah.
it's so the first part of the question is there some synergy and benefits and learnings that's coming out of what I would call this incubator group, the Fiore group, that does really good work across a range of different commodities in, throughout the Americas, but also more broadly. Yeah, there is. It's an interesting cross section of people that they've assembled in the West Red Lake case, and I think we talked about this in our first interview. Shane Williams is a really smart man, a very deep experience in the mining industry, project execution, and definitely on the company formation side of things. He does share with me some perspectives. I think what I'm taking away from his most recent experience or that group's experience is just be very deliberate about getting the plan done the way you want so that you don't find yourself in that situation where you're chasing too many objectives, right? Shareholder satisfaction, production throughput, grades, etc. Maybe your plan isn't as thorough as you would like it to have been. Again, I think they've done good work there, but it is hard. So all I would say is I get 3 bits of feedback from shareholders. One, drill baby drill. Just keep drilling. Don't worry about it. I don't care if you come back into production. Just drill, drill, drill. And then I get the other feedback that says, why aren't you in production today? Let's go. So I've said this before. I'm not compromising on those two. We have a plan, and it's in the middle of those two. And our job is to drill it so that we get good plans and then make sure that when we do go back into production, we can stand behind it. And so far, so good. The shareholders have been very supportive. They're sort of listening to what I'm saying and they're believing it, I think, to a degree. We will get to a point where that pressure changes a little bit, but it's a little bit it's a bit off in the future yet.
Well, I think when the share price is performing like it's been performing for you in a steady fashion, I think people tend to be a bit happier. To let you sort of do your thing. When we first chatted, you were developing a plan to come up with a plan.
Yeah.
Also, when I asked, well, what type of geological setting is this? You were like, well, there's a few different ones. We're not really exactly sure. Have you learned any more on those two fronts? Have you been able to sort of develop a sort of a good, firm sort of like plan? And do you have a better geological understanding through some of this limited initial drilling that you've done?
Yeah. So I'll do the geology part first. I think we do still, and I don't think Stacy Jones or Leaf Bailey can come to you and say, here's the exact ore body model we're working with. But what I can say is a little bit more definitive than I said the last time. This is a structurally controlled, highly metamorphosed chalcopyrite bornite ore body. I mean, that's basically what we can tell you. But what we found in these last several months is how important the word structurally controlled is. So now we've got a better sense of as we come into these ore bodies and you're, drilling through granitoid and then all of a sudden you get a bit of foliation or fabric. That's the first indication that you're getting into the mineralized zone. And almost invariably in every scenario, the moment that you pick up a little of that, you get a bit of chalcopyrite, a little bit of magnetite, and then it increases to bornite, chalcopyrite, magnetite. And then the sulfides start to act a bit like toothpaste because there's lots of them and they move around and you get some very high grade blows, but they tend to be always within that structural corridor, these lenses. And then when you're out of it, you're out of it. And so it's changed how we think about the geology and it's changed about how we're doing the drilling. I think I would have mentioned at the time we were doing the first oriented drill core on this project. So all 52,000 meters. So that means when we take a structural measurement, we can step back and go, oh, right, that's the structure. Here it is. And now we can model it in 3 dimensions and really get at targeted, what I would call surgical drilling. So yeah, the team's done a great job. I don't know what the original ore deposit type is, and they don't either. They'll tell you a story, but they're not there yet. My guess is give us another 6 months and we'll come back and we'll probably say it's a structurally controlled chalcopyrite bornite mineralization with some alteration that we're getting our heads wrapped around. But it's a pretty complex set of rocks. The rocks themselves they tell their own story. I have a rock on my desk that tells me every day I know only what I know. But I will say the team is doing a really good job from a regional exploration and from an inside the asset perspective. We're going to hit this out of the park. It's really good stuff. On the plan to make a plan, it's going exactly as I had hoped. Drill first, inform ourselves about the resource, translate that into mine plans. I just saw the other day the first sort of intersegmented sort of mine plans that'll be part of the PA. I don't have the numbers yet, but I at least saw the plans. And they're doing exactly what I want. They're sort of saying, hey, Colin and the rest of the team, we need to do a bit more work here so that when we do put the plan out, it makes sense. And then stitching them together in a way that makes sense is a part of it. It's not hard, but you have to do it. And then lastly, I would say the biggest thing that we're sort of trying to unravel is the permitting. So we have lots of authorizations and permits, but they do not stitch together. We're forecasting a 12 to 15 year mine life or targeting a 12 to 15 year mine life. And that just demands a different set of conversations. We will get there, but there are moments, right? It's just this is all about communications and making people trust what we're saying makes sense. They understand it, and then they can evaluate what we're doing. It's coming along well, but that's the last big part of the plan. Can we permit this in a really cost-effective and thoughtful way?
So I think last time we chatted, we were talking about 50,000 meters of drilling. It started the program, and it sounds like that's all completed. What sort of like upcoming catalysts do you have over the next 3 to 6 months?
Yeah, no, it's good. So I think, and I'm glad you said 3 to 6 months. So over the next couple of months will be just the completion of all the assay results from the drill campaign. I think I'm probably going to get this wrong, but I think we're about 63% of the assays have now been released. We've got another 37 to come. I think it's going to be 2 releases, maybe 3 over the next 6 weeks. And then we're moving into the PEA. And the PEA, this preliminary economic assessment with an intentional mineral resource estimate update as part of it, that will be still mid-year. So mid-year for me is anything from June 30th to July 21st. Just it's in that sort of time frame, and we're working through it as quickly as we can. But people can expect that as what I would say a significant re-rate opportunity. And then post that, we will start the feasibility study. My guess is that will start somewhere around September. And we're also targeting the submission of the amended permits on October 1st. So the first day of Q4 ideally is when they go in. And those are all really important things because they're progressive. Drill results build into the PEA. The PEA builds into the feasibility study, and then the permitting is sort of the cherry on the top. So right now, that's what people should expect, and they should be looking at it closely. That we're kind of hitting the dates, and we're at least getting to where we said we would get. I think the only other things that I would have people pay attention to, the First Nation relationship here is super important. We continue to learn through them and learn by it, and we will have some additional sort of, I think, what I would call sort of celebrations about the First Nations commitments to this asset. We're going to try to do a ring the bell ceremony in June at the First Nation and sort of celebrate their efforts here in a way that makes sense. We'll also have some site visits as well as some analyst tours happening over the next several months. Those aren't really newsworthy, but they're important.
Sure. Do you have formal analyst coverage from any of the banks?
We don't have formal yet. I'm being promised lots of informality and funness. It is coming, but I will say there's definitely 2 groups that are building the plan and giving us some line of sight as to what they require to get that analyst coverage in place. As you know, they're all pretty nervous without an economic model behind it. My hope is that we'll get 2 of these groups to provide some coverage before the PEA comes out. And then, after that, we'll probably see a couple more. So ideally by, I'd say September-ish, we'll have 4 people covering it.
And congrats! You guys just recently announced closing of oversubscribed financing. Maybe you could walk us through the details of that. What was the price, the terms, who led it? Was it a bought deal? How much did you originally go for? What was the final number?
Yeah, well, all good questions. So surprised me. It was about a month earlier than I thought it was going to happen in the grander scheme of things, but I get surprised a lot. So April 9th, we basically said, this feels like a good opportunity to bring in some funds. So bought deal overnight, presented to us by the syndicate, Canaccord, Haywood, Raymond James, and Stifel. And, they delivered. In my view, we started with the number 20. I think at about 5 or 6 o'clock Eastern time, it was clear that there was quite an appetite there. And at least informally, we saw quite a good sized book. So then overnight, we made the decision to upsize it 30. And then as we finished through the rest of the sort of close period, et cetera, the syndicate decided to exercise the full green shoe for good reason, in my view. So we ended up bringing in about $35 million, the majority of which is in hard dollars, but there's also about $7.5 million of critical mineral flow through there that was at $1.70. And then the rest of the hard dollars was at $1.15. And I think where we sit today, and I'm just going to make sure I get the numbers right, we're now at about 156 million shares outstanding, of which the Selkirk First Nation has 18. They have 6. The rest of the insiders, board and management have 4. And then the balance is almost an even split between retail and institutional shareholders. So it's a great outcome for us.
And looking at your trading today, what sort of market cap approximately does that sit you at?
I knew you were going to ask something I couldn't answer. I'll do the math off the top of my head. I think we're about $180 million, but I could be wrong. But
Okay.
it's a significant uptick from where we were.
No problem. I should have I should have known that myself, but I thought
No. I should be living and breathing this. I'll look on my computer here and see what it tells me.
yeah.
But I think that's
Well,
about right.
well, that still seems like tremendous values. Why don't we go through like what you've got? So you've got you did an updated amended sort of technical report as part of like the listing. Did that come with like with an MRE that you can use presently?
It did. So what what we did in August of last year, and this was out of that extended bankruptcy process, that this technical team compiled all of the available drill hole information. 190,000 meters of drilling has been done here on this property before R50. And they took that all, it's now in a what they call a leapfrog space. It's this sort of three-dimensional space you can spin around and look at things. And they used that to upgrade the resource estimate. And we increased the known mineral in the resource by about 48% at the time. And that's what I'd call sort of the foundational starting point for the entire initiative. And then we've added our 52,288 meters on top of that. And that's going through the process right now of updating those mineral resource estimates. But I think I can be safe in saying it's more than it was, and many of the zones are pretty much the same grade, if not a little bit higher. So we're moving forward. I'm still waiting for someone to actually show me the detail, but that's going to come in the next several months as we finish off the assays and get all the data into the.
Have you selected a group to do your PEA?
That was done when we started the full engineering work back in October. So Hatch Engineering are driving that, and great reminder, sorry, I should have mentioned this. And SRK are also contributing to it from the wastewater and the tailing side of things. But Hatch is doing the actual PEA write-up, but it's being led and directed by our senior vice president of projects and engineering, Scott Fulton, and then the broader team are really directing the day-to-day. So yeah, it's going well. I would love to have more insight into some of the stuff, but one thing I learned in my career is it's important to know where the details are, but it's also important to let the team work through it. Sometimes early information is bad in the CEO's position. Sometimes you just have to let them work through it. But nonetheless, I will tell you the numbers are starting to present themselves, and we're not seeing any big surprises. John, your other question about market cap, it's actually 220. So 220 million, which is that's great. We've hit yet another threshold. I know when we hit 100 million, I got a bunch of emails. Now we're north of 200. That's progress.
Absolutely. And this was a past producer, so you've got some assets, you got some infrastructure. Maybe you could kind of quickly cover like what you've got that makes up this full project in terms of infrastructure that and maybe if you can, I'm not sure if you can, but if you were going to go buy that in today's dollars, do you have any idea of what that would cost?
On both answers, yes. Are either of my answers right? Different issue. So the reality is this was a former producing mine as recently as May of 2023. That's not that long ago, right? We're not dealing with stuff that's been out of production for 15 or 20 years, and it's been maintained quite well during that period. So long story short, $330 million invested in above ground infrastructure, road, power line, mill and processing facilities, surface roads, impoundments, maintenance shops, assay labs, and a 400 person full rotation camp with beds and toilets and chairs and stuff like that. And again, I say it a little bit in tongue in cheek, but this is really important part of this. Talked about drilling through the season, the winter and the fall season. We would not have been able to do that without that camp facility. I think at the peak, we had about 90 people in the camp, and they got a place to go get warm, and the shift could do the things that they needed to do, and it really allowed us to do the work that we did in a pretty cost effective way. So this is a huge leverage point for us. Our target objective here is 30,000 tons copper equivalent per annum for that 12 to 15-year mine life. If you were to go out and think about that from a greenfields perspective, the run rate in the industry is around $22,000 to $25,000 per annual ton, US dollars per ton. So when you sort of do the math, you're talking about 800 to 900 million US dollars to rebuild and establish this. And I think that that's conservative. So in Canadian dollars, it's like 8 gajillion, or more like 1.3 billion Canadian dollars. And we're getting a big part of that. Like, we will have to put some more money into this, but we're getting a big part of that because it already exists.
Great. So that's a good head start in terms of PEA and cap costs and things like that. It'll be a little lower because you get to leverage off of some of that existing infrastructure.
It will be dramatically lower in some people's view. I think I would be very surprised if it's 20% of that cost. Right now, what we've sort of said just on the WAG, think of it as an educated guess. We're sort of saying it's in that sort of $200 million Canadian that we would need to invest in the restart, which will be both in facilities, the development of the undergrounds, making sure everything runs properly, and then some allocation for bonding of the asset as we go forward for closure and reclamation. What I do know is part of if the number goes higher, it's going to be because we're going to make decisions about owning the capital versus operating cost trade offs. So there will be some of that. And one of the things I also learned, this is quite neat, and this is part of the broader macro thing happening in Canada. There's quite an incentive around new technology and equipment purchases. So right now, if we buy like a new truck or we put in a new motor on a mill, et cetera, we can get a 30% tax rebate on that. So instead of spending $100 for that equipment, we're now actually spending 70. So it's a big deal. Yeah. So we'll make some of those trade-off decisions as we go forward.
Well, it sounds like there's absolutely nothing to do. You sounds like you got this fully under control. Is anybody, trying to convince you to like take on other projects? Are you guys going to be completely focused on sort of a single asset strategy, or are you thinking of looking at other potential assets in order to further grow the company?
So it's a good question. So I'm going to say not really. I think what we're doing, and remember, I spent 13 years of my life as the vice president of corporate and business development. I used to go around with a cloak and dark glasses and trying to cut deals all over the place, right? That was kind of the nature of the biz. I'm always mindful that there's something else to do out there, but I'm also mindful that what we have right here in front of us is quite valuable. And there's three parts of the quite valuable. The first part is get the first thing done right. The second is use it as a platform to expand or extend the mine life because the exploration potential here is very high. And I'm trying not to be overly promotional in that. It really is good. We're exposed to a district that hasn't seen modern integrated exploration for 50 years. There's a real opportunity here working with the First Nation on the land in a way that makes sense that we could all be quite surprised as to what we come up with. The third part, though, is if we get those first two pieces together, we will start to look at other opportunities for sure. And it's because we will have demonstrated that we can do it. And then my hope is the cost of those other opportunities come down because now we have the power as opposed to that other party. But right now, I'm not interested in too much of that. I'm interested in just getting this done and getting it done well and not getting distracted.
Very good. It's good to be focused and block out the noise. And I was being a bit facetious. There's a lot.
No, but you're right to ask it. Like, seriously, what's the bigger, grander strategy? We are creating options. We can have an option of extending the mine life. We have an option of expanding the size of the mine life if it makes sense. We have the option of acquiring other resources, possibly in the Yukon. We have the option of maybe merging or expanding, or, who knows, turning into a straight high dividend paying stock that is, super rare. Like in my view, if we get the first part right, the options will present themselves, and they're multiple.
Now, something that's kind of been topical for a while is, investability of Canada, mining, its resources. What would you say about, doing business sort of in the Yukon and also having quite a bit of experience doing business around the world? Do you think that that Canada has a great opportunity here with rising metal prices and just how much resource that we sort of have available? What would you say to sort of investors that maybe are somewhat concerned about investability? There's obviously been some people south of the border making cracks about Canada, and here we have a sovereign wealth fund that's being created. So, anyways, any comments on any of that?
God, where to start? So I think the investability is very high on people's radar right now, and probably even more than it was less than 6 months ago. I think the broader geopolitical landscape is just making everybody sort of pay attention to the extent that they can. And if you want to be in the resources business, you kind of have to go where the geology is, but you also want to know that you have security of tenure, that you can own what you can own, and that you can operate safely there. So I think Canada is a destination for that. And I've heard that a number of times, and I'll continue to hear that, I'm sure. What I see on the ground, though, is maybe not as transparent as that. I think in Canada, anyways, I think we've forgotten that for maybe 15 or 20 years, it's been very, very hard to build and do new things. The permitting timelines have been very, very long. And there hasn't been what I would call genuine support for it. I think what we're seeing under this current government, at least federally, is reawakening of that appetite to go do things, whether it's the major projects office, etc. The problem is the middle of the sandwich is still quite accustomed to doing things the old way. And I think the old way is where I would show up and people would maybe have a genuine distrust as to my motives, as opposed to going, oh, wow, he values the environment. He wants the water to be clean. He likes the communities he works with. He's respectful of First Nations. He's just trying to build a business. So I think that that is something that I would say, folks, get ready, be aware of it, and ask CEOs like me, what are you doing to manage through that? And all I'll tell you what we're doing is we're project managing through it. We're being transparent, we're being optimistic, we're being glass half full, and we're being engaging, but we're never stopping. It is 24/7, and it's happening on little things and it's happening on big things. So I don't know if that's where you're going with your question, but that's my view.
That's a great answer. That's thank you for being very transparent on it and actually answering a question uh, many would probably like look to sort of avoid. Maybe walk us through like what does a day in the life of Colin look like with all of these different facets? What is there a typical day, or are they all so different?
They're pretty typical, I guess. There are some days that are atypical for sure. It's usually up around 5:30 or so. I try to eat a meal at home as opposed to at the McDonald's or whatever. Get a cup of coffee, which is usually the first of seven. And then what I try to do is I try to just take stock of what I didn't do the day before and just make sure you clear the decks and then engage with the team, usually the site first, and then the exploration, the drilling side. And then we have a very active conversation almost daily about, what are we doing to communicate with not just our team, with the First Nation, with shareholders, with the broader investor groups. And then it sort of gets to a couple of things that I would call more technical. We dip into the exploration activities, we dip into the operating activities at site, which we've just increased our responsibility for. We dip into the engineering and design. And then the hardest thing, and not this isn't about you, but like this might look natural to you and it looks like it's flowing pretty well. This is hard for me. I like communicating, I like talking, but I don't necessarily really love being the center of attention. Sometimes I do, and sometimes I don't. So this is probably the thing that's the most uncomfortable for me. I like doing it, but it is something that I have to muscle up to.
Well, I think you're doing a great job. I would say, well, just keep doing it till you get it perfect. You're doing quite well. I appreciate the access because I know how busy you are. So certainly appreciate the access. Now, just a couple of final questions before we sort of wrap up. And we're recording this on a Friday afternoon after market close. Typically executives are busy with sort of other things. So really do appreciate you giving some time. How often are you making it to site? It seems that you're in a pretty nice office there with a pretty beautiful view. But how often are like do you go to site?
I do. It's something I believe very strongly in. So for instance, last week I went to site on Thursday and I was there until Tuesday. We've just recently brought on a director of site operations. I wanted to make sure that we had time there together to go through the different aspects of the site, but also because we've taken on responsibility for a broader aspect of site care and maintenance, it's really important that I also spend time there and make sure I understand the challenges that the team have on the ground. It's also important because the First Nation community is at Pelly Crossing. We just stopped being able to cross the Yukon River, which we do with the ice bridge, and that just happened when I was there as well. So I wanted to see that just to understand it a little bit better firsthand. But yeah, it was a good number of days. I think I did 3 investor calls while I was there, with the safety gear on and stuff like that, but we covered the landscape. No, I do go to site pretty frequent. I think that would have been my 19th trip to site since August of last year.
Hey, fantastic. Just what we want to hear. We like to hear there's a good connection with what's actually going on the ground. So fantastic. Good to hear. Well, Colin, are there any sort of like final comments that you'd like to leave us with? Any final thoughts?
Maybe one. Aside from please ask questions, be interested in the story, be available to it. I do think there's a very significant value opportunity here for folks, and it will start to run away from you if you're not paying attention. But I think the thing that I would ask folks to do, you talked about this broader copper marketplace and it's robust, etc. I think it is. I think it's actually we're in for a very good run for a number of years, if not many. But I also want people to understand that the copper market is like any other commodity marketplace. It has its ups and it has its downs. I just wouldn't get too excited if it moves in directions that aren't maybe super normal. That is normal in the space and it will happen, but you sort of have to believe the fundamentals. I do. But I also just want people not to get too panicky. And we would have seen this maybe in the last 2 to 3 months. I think there was a point where we were right around $6.15 and it backed off to about 5.30, and there was a lot of stuff going on. People were like, "Oh my god, what's happening?" etc. But you can see it's moved back up into that space. I just think investors have to be ready for that. It's part of life.
Well, one of my own thesis and my own interest in the commodity space and whether it's base metal or precious metal is I do think that we've got an inflationary period still ahead of us, and that you want to hold hard assets. You want to be tied to hard assets. At the same time, one of the things driving that is the globalization thing is kind of falling apart a little bit, and we have some nationalization happening, and that we realize that we can't just rely upon global partners all the time for things, and that we have to sort of develop our own domestic sort of sources. So yeah, that's one my own sort of reason why I think that copper and gold and silver and mining in general is seeing a little bit of a resurgence, is that just can't happen in far off places with an idea that we're going to have a direct source of those materials, and we might want to develop them closer to our own backyard. Anyways, that's kind of it. Colin, I really appreciate getting a good catch up with you. Congratulations on closing up your financing and getting a bought deal oversubscribed, full green shoe exercise done. Congratulations on getting your drilling done a little bit more than what you sort of talked about, and wish you lots of success on ticking off a few of the other boxes. Look forward to kind of catching up with you again, and we'll see how the share price does. Share price has been a good performer since our last interview, so everybody should be pretty pleased with it. And looks like you got a fair amount of infrastructure to leverage on, and a good cap structure.
Well, look, I appreciate the time. It's a two-way street, right? You're busy, and I appreciate the questions, the line of questioning, right? Because at the end of the day, we will make some mistakes. Hopefully, they're small, and we'll correct them. But a big part of this is just communicating. So your time, I do appreciate it, and I also appreciate the time that your sort of investors and your group, your communications group, are paying attention to it, because this doesn't work without you.
Well, thank you so much. Have a great rest of your Friday and a good evening, and we'll catch up in like the next quarter.
You
Thanks,
bet.
Colin.
Take care.
Okay, bye bye.